Eric here from 5minuteinvesting.com. And today we're going to talk about trading against a trend. And should you do it? Why and why not? Now, before we start, I just want to let you know that I always link to any related videos in the description below, and I'll attach all the free stuff that I give away. So be sure to check out the description. So let's start. Trading against a trend. In the past, I always try to trade against a trend. Now, how do you know if you're trying to trade against a trend? So let's say you know the market is in an uptrend right now, and you're trying to find some sort of signal, some sort of indication to show that it is changing from an uptrend to a downtrend, or from a downtrend to an uptrend. Now, it is very common in the foreign exchange market, which is called Forex, because there is no definite and permanent trend. So most people try to find the trend turning points because it maximizes their profit. But should you trade against a trend? And what does it mean if you want to trade against a trend? So when you think about a trend, it means you see a wave and a second wave and a third wave and a fourth wave, and each wave is higher and higher than the previous wave. Now, in fact, when you look at the chart, you can bring up any chart and you look at a good, nice trend. Try to count how many waves there are. Now, this is important because I actually did this exercise myself. And in a good trend, usually there's 6 to 10 waves before the price actually changes in trend. So it goes from uptrend to downtrend. That means there are 10 waves in an uptrend, and then it goes to down wave, and there's another 5, 6, 7 waves, and then it comes back into an uptrend. So at any of these tops, let's say in an uptrend, you will think it might be the last top, or you might think the price can't go up anymore because it's really, really high. Now, if you go back to what I just told you, there's 5 to 10 waves. That means the only wave that signal a change in trend is the last one. Now, in a stock market, you don't know which wave is the last wave. It can be the 5th, it can be the 7th, it can be the 10th wave. So how do you know which wave is the last? You don't. And that's the biggest mystery in the stock market. And you can do more research that might increase your chances, but when you look at the number of waves the stock market have, like 8, and only the last one is a change in trend, it makes more sense to trade with the trend when you're buying every dip in an uptrend. And once the trend change, then you sell every top in a downtrend. Now, having said that, personally, I don't trade 2 of the 3 markets. So there are 3 markets in total: an uptrend, a downtrend, and a horizontal trend. And I don't trade 2 of them. So that is a horizontal one and a downtrend. Because in the stock markets, there's a general increase year over year of around 7%. Even though there's a recession, even though there's a crash, there's generally a 7% increase. And if you know that, then you know that by selling a stock, you know the time is not in your favor. Now you might justify and say, okay, this is a shitty stock. You might justify, say, oh, this company strategy is bad and I think it's going to go bankrupt, and so on and so forth. But in my opinion, I want to be making money 90% of the time, or I want my stocks to be growing 90% of the time. So I would trade only an uptrend, a growing stock, which everyone likes, or not everyone yet. And then I'll buy every time the price has a weakness. And I'll figure out what the weakness is. And once I determine that it is only a temporary problem, not a change in trend, then I buy it. So what I'm really saying is, it's much easier to do your research and verify this dip is not a change in trend than to try to gamble and say this dip is the change in trend and try to short it. And if you buy dips in an uptrend, it will make your life so much easier. Even though you're not perfect on your technical analysis, even though you're not perfect in your fundamental analysis, if you select a few great stocks with a great trend and you buy the dips 8 out of 10 times or 8 out of 9 times before the last wave, you will make money. Now, that is of course not a guarantee, and you should look at my disclaimer below, but that is a general idea. So let me know if you have any questions, and if you implement it, and if you have any doubts or concerns, let me know below and I'll try to answer it for you. Good luck.